we starting from? I'm sorry.
Yes, this is well, we are starting from page um, hmm, maybe 48 in your materials. It says plan and track to succeed. Success.
48. Okay.
Is that your? I don't know if my pages are the same as your pages.
Yep.
Okay, but
47. I think.
I would like to focus on page 59 to 63. At what point there is a profit and loss, an example of profit and loss that I would like to discuss with all of you. But we can talk about it later. I'm just, like with the Zoom and not being together, maybe it's a little bit difficult to have the time to review this. But it's fine. So today we are going to talk about goals versus actuals. We are going to talk about two financial scorecards that we have to keep in mind. We are going to talk about business planning, and we are going to talk about tracking our numbers. Let's talk about goals versus actuals. What are goals and what are actuals? Goals are the what you are intended to hit. Okay, again, we have a profit goal, and that profit goal actually gets broken into different goals: a goal for GCI, a goal for expenses, a goal for cost of sale. So goals are that we plan them at the beginning of the year, actually even earlier, and this is the time. Just for your information, the office budget is due for review for our regional leadership group on Friday. So that's exactly what I'm working on right now. And we are setting the budget for 2021. Actuals are actually that the numbers that we have achieved based on our activities. This is where we are at this point. So that's the difference between goal and actuals. Let's talk about two business scorecards. And by all means, stop me. And if you think that I'm not making any sense, stop me right there. One is the profit and loss, which is where we are going to focus. And the other one is the balance sheet. The balance sheet is not covered in these materials. Basically, to put it in a simple way, the balance sheet is the net worth of a business or of an individual. I was trying to think about a simple example of a balance sheet, and I just thought about owning my own home, right? So if my home costs $200,000, that is an asset. That is the amount of that asset. If I pay already 50,000%, I'm sorry, $50,000 of that total value of 200,000, that is the equity. And what I still have to pay to the bank is the liability. That will be $150,000. So basically, my net worth today, based on those numbers, will be $50,000, the equity. Again, I'm not going to focus on that. We really want to focus on the profit and loss statement. And what this does is giving us the financial health of a business within a period of time. It could be monthly, it could be yearly, it could be quarterly, it could be a mid-year. Is made up with three elements. The income, which is, as we talked about it yesterday, is what we bring in. The expenses is what goes out. And remember, for real estate agents, there are two categories: the cost of sale, which is actually the payment to the company, is what it costs to be in business with a real estate company. And then the expenses, which is actually what it costs to run your business. uh, any questions about this? Great. He says, if you can read a nutrition label or a baseball box score, you can learn to read basics and financial statements. Do you guys agree? If you can read,
Yes.
well, I don't know. I was not able to read some of those chemicals that some of those labels have, but let's leave it in there. So profit and loss is a snapshot in time of the financial health of your company. Um, I see the budget as the way, a tool for planning, and I see the profit and loss a way or a tool of tracking. Um, let's look at this P&L right here. Do you guys see it? Let me minimize my screen. So this is a simple P&L. As you can see, it has the categories or the different sections that we spoke about. We have the income, we have the cost of sale, we have the operatings, and we have the profit and net as a result. So the percentages that we were talking about yesterday should be reflected in this P&L. As you can see, it has two sections, the budget and the actual. The budget and the actual should mirror each other. Let's take 5 minutes or less than 5 minutes. Let's glance at it and let's see what we can extract from this P&L. We don't know for how long, like what is the period of time that we are observing. We don't know much other than this person has income, has a cost of sale, what the operating expenses are, and the profit that he or she has budget for, and the actuals. Just take a look and we are going to go over it. It says income, total residential income. The budget is 275. The actuals is 260. So this, in my opinion, I believe this in this P&L, we are reviewing a P&L towards the end of the year because it looks like the majority of the goal is already achieved, The income budget is 275, the actual 260. Well, actually 270. As we said yesterday, this income comes from residential and commercial. And if we go more granular, it comes from different things, from listings, from sales, from referrals. The cost of sale is what this person is paying to the company. And the expenses is the running, the operating expenses to run that business. The budget says 48,000 for salaries, $6,000 for lead generation, education $6,000, occupancy 2,400, supplies 1,200, communication 5,000, total automobile and insurance 13,000, equipment 0, total other expenses 500. So we have a goal, a budget goal of 110, 400, and the actual is 90,340. So the way I will look at this at a glance will be the budget looks good to me. This person did a great job budgeting. If you take that, if you take the cost of sale, the total cost of sale, and divide it by the GCI, the 82,500 is actually 30%. You remember how we say 30, 30, and 40? This person did a great job at budgeting that. The actuals 60%, which is even lower than what she or he budget. Expenses, the same thing. If you look at total expenses, this person budget for 82,100. The correct amount will be 82,500. I don't see a problem with that. It is within the 30%. And then the profit, the 40% of that GCI that is expected, the 40% of 275 is 110, 400. So the budget looks good to me. Let's look at the actuals on the other hand. Income, we have 270. Cost of, like they are just $5,000 away from what they budget. The cost of sale, we have 60,000, which is less than the 30% standard. And then in operating expenses, the number, in my opinion, I don't know, what do you see? Doesn't make sense. This person already went over the 30%. They have already spent 119,660. Did you see that? The budget was 82,500. They are over already. I put in red the number that actually will match the standards from the MREA book. And I'm not sure where is this in your book. Can you please look at your materials? You should have a chart with the different standards for each of the categories. I believe it goes It says salaries will be 15.5, lead generation 9.6. Do you see that in your materials?
Yeah.
Well, the bad news is these percentages are a little bit obsolete, and the new ones are coming up on the Millionaire Real Estate Agent Book 2.0. I have the correct amounts, and it's based on a revision on the business clinic planning that Aaron taught last week. They are very similar, but there are a little bit of a change. So now where you have a 15.5, it's actually a 14.4. Where you have a 9.6, it's actually a 9%. When you have an education 1.5, it's actually a 2.5. When you have an occupancy 1, it remains at 1%. Total communication and technology remains, I'm sorry, instead of 0.7 is 1. Total supplies and office expenses is a 1%. Total automobile and insurance is 0.8. And total equipment and furniture is 0.3. Again, don't get hung on these percentages, but I went ahead and I did a calculation based on the actuals and based on the budget that this person created. The correct budget on the operating expenses portion for total salaries instead of 48,000 should have been 39,600. And just without thinking about anything else, always know that from the operating expenses categories, salaries amount to 48% of the total operating expenses, of the total 30% in expenses, and lead generation amounts to 30% of the 30% of the expenses. Am I losing you? Okay. So this person budget $6,000 for lead generation. The budget amount that this person could have used will have been 24,750. Education and coaching 6,000. The correct amount or the standard amount based on the new percentages is 6,875. Total occupancy 2,400. The amount is 2,750. I'm not that concerned with the amounts that are lower than the standard. I'm concerned with the amounts that are over the standard. Total supplies 1,200. The budget could have been 2,750. Total communication and technology 5,000. The budget is 2,200. And then total automobile and insurance. This person budget for 13,000 when it should have been $825. I will have a lot of questions for this person. What is exactly included in there? Bottom line is actual total profit or net profit is 90,340. This person is what, $20,000 away from reaching the goal of 110. Again, the budget should have been 12,500. This person already spent 120. The idea of the P&L is that we review it constantly. If we don't look at it weekly, at least we should look at it every month. Okay. So did you see what we are looking at? Do you see what is the point of this exercise? You know, again, I don't know what is this time. I mean, are we looking at this P&L in November? Are we looking at this P&L in January? I mean, if it looks to me that is almost towards the end of the year. Let's see. Any questions? So we are gonna build a summary P&L, but rather than building it, I thought that it would be great if we go to the spreadsheet that I shared with you guys. I don't know if you guys have all the numbers that we will need to actually build it on the spot, but I thought it will be good to go over the categories if it's okay with you. So I'm gonna stop my sharing and I'm gonna bring that spreadsheet. Do you guys know what spreadsheet I'm talking about? You should have it on your materials, and I believe Giancarlo has put that on the chat also.
You're talking about the MREA economic spreadsheet?
Ma'am,
Yes.
okay, okay. So we are not gonna, let me explain what the spreadsheet means. It has 4 tabs at the bottom. One is
Okay.
the economic model. The other one is the budget model. The other one is the full chart of accounts, and the other one is the summary profit and loss. We are not gonna go over the economic model, but I really wanna bring to your attention how easy it is to work with this. This was covered by Aaron last week in his 2 sessions. Giancarlos had put the recordings on Facebook in case you missed it. But look, again, is pointing out the idea that profit is the name of the game, okay? And it's pointing out the idea that we are building in reverse. We are backtracking. If this is what we are expecting, on the lease side and on the buyer side, and if these are our conversion rates, it's gonna give us the number of total seller appointments and buyer appointments that we should target. This is the economic model, and it couldn't be more simple than this spreadsheet. Okay, I cannot imagine how top agents, high top producers back in the day did it without the spreadsheet. Everything is there and it's full of formulas. The moment you start entering your sorry, let me go up. The moment you start entering your numbers, the formulas will calculate, and it gives you the instructions. Okay, so if your net income is whatever it is and your conversion rate is whatever it is, and you have these listings and you have these sales, at the end of the day, these are the appointments that you should be striving for. So we are going to look at our profit and loss statement, and I want to bring to you to your attention 2 things. In here we have what we spoke about yesterday. It's called the full chart of accounts. The way I see it is these are all the possible accounts that you may need to build your P&L. Okay, all the subcategories, all the sub accounts are already set up in here. The good part about this is the moment we start entering numbers, we are gonna get a summary on the next tab that is gonna have those numbers ready for you to see. And at the end, it becomes this simple spreadsheet: total income, cost of sale, expenses, and our profit. Is this clear?
Mm-hmm.
Okay, so let's talk about the full chart of accounts, or in my opinion, the extended version of the P&L. Something that I like a lot is the fact that these little triangles over here give us a clue of what we can put or not put in here. Okay, at the end of the day, it's a P&L. We have our income, we have our cost of sale, and we have our expenses, but look how granular it goes. It doesn't only say salaries, it says salaries for who? For the admin, salaries for the owner of the team or the the rainmaker. It's talking about the expense of the benefits if you are giving your employees benefits. It's not talking about lead generation in general. It's talking about online advertisement, print materials, offline, etc. So I'm just gonna go through it. I really recommend that you download this on your in your desktop and start building your numbers. And if you have any questions, we can, at any given time, send me an email. We can set an appointment and go through it. I really think it's simple, but just in case. So let's go to the top. It says income. It says includes residential and commercial listings, sales, lease, customer transaction fees, and other bonuses, less outside referrals paid or concessions given. This is all you can put under the income. Leasing income, transaction administration fee, includes customer transaction fees and bonuses. Here is where you put your listing fee if you are the listing agent. When we have a listing, how usually says 2.5 plus or minus 275 or $300 listing fee, that is the fee that you put in there. Commercial income, the same thing. Other real estate income, it says includes transaction fees. Total income GCI is the sum of all income earned from all transactions by the individual, team, or group members, not the same as taxable income, gross profit used to calculate the taxes. Sorry, an alarm went off on my phone. That number actually is right here. The 1099 number is it is actually on the summary in here. Oh, come on. Okay, let me find it. Again, income, every income that we get, whether from commercial or residential. Cost of sale, remember the two categories, 30% of cost of sale and 30% of expenses is what we have to keep in mind. Listing splits and bonuses includes compensation for listing specialists, lead listing specialists, and inside sale agents when applicable. Buyer split bonuses includes compensation for buyer specialists, lead buyer specialists, open agents, and inside sale agents. Let me make a brief parenthesis on this. One of the questions that you may be asking yourself is, when I build my team and when I hire people for my team, right? When I'm ready for the next step, how should I compensate these people? Are they 1099s? Are they employees? How we should think about it? The standard way to think about it, or my suggestion will be this. First of all, keep in mind that salary people you have more control over. Okay. When you have someone in your payroll, you can control their time, you can control their activities, you can even control the way they dress if you want to. Okay. This is because they are employees. At the end of the year, you are giving them a W-2 for the compensation. 1099 people, I will not use them as part of my team, um, unless they are like, for example, a photographer. Like you usually don't put a photographer in your payroll. You just pay them by the job, correct? This will be a 1099 person. This will be someone that you really cannot control because they don't have a set amount of hours. They basically, the only agreement you have with them is that they are going to perform a service for you. Okay. So if you are, or when you are ready to bring someone in your team, think about, like what kind of person I'm bringing. I'm bringing a W-2, I'm bringing someone that I'm going to pay towards with a salary or with a 1099. If we are thinking about admin, which should be the next person when you build your team, for you being solo agent, the next person that you're going to add will be an admin. That person should be a salary person, and it's not going to show anywhere in your cost of sale unless you decide that based on their work, you want to give them a bonus every time you close a transaction. But the standard, what the majority of agents do, is consider that person as a salary. If the next person in my team is a buyer agent, that person will be compensated through my cost of sale, meaning I am not putting that buyer agent in a salary. Okay, think about this. I am not putting that buyer agent in a salary. Buyer agents usually are compensated through the splits in a commission, meaning if I'm your buyer agent, Amir, we are going to split the sale and you're going to give me a 25% split on that. So it is your cost of sale and it's my way of compensation. Is that clear? I will not put a buyer agent in my salary, in my payroll. Now, the next person that you may want to include in your team may be a listing agent. This is someone that actually I will pay a salary to. And this is someone that actually I will pay a bonus to. So this will be a person that will be showing up on my profit and loss statement in the two different categories. It will be here as a cost of sale under listing specialist, or sorry, listing split bonuses, but it is someone also that I will have here under expenses, under management, or under administration. So let me recap, okay? Let's think about two ways of compensate people in our team. If it's an admin, I will pay them a salary. If it's a buyer agent, I will pay them through the splits on a sale, through the transaction. Meaning if there is no transaction, there is no compensation for this buyer agent. And a listing agent, a very good one, I will do both. I will have a salary, maybe a base salary, and then I will compensate via bonus, and that will be a cost of sale for me. Any questions here? Okay. So I may not go through everything, but take a look. Is there something that needs explanation? Let's see, benefits. Well, you may want to give them, retirement or pay for their insurance. Lead generation and conversion. We have prospecting and marketing. Look, when you go to summary, it goes exactly like that. It goes like in a big chunk. But that's why this is called the full chart of accounts. It is the it is the P&L, very granular and with all the possible accounts that we may need. Offline, online, pre-direct mail, third-party lead sellers, events, lead generation conversion tool, meals, gifts, entertainment. Be careful with this category. We are going to talk about it a little bit later, but be careful. And I will always consult with my CPA about these, I would say, funky expenses. We may consider this as something that we can write off and maybe is not. Okay. Listing management services, photography, staging, promotional items. You see, all of this I will pay via 1099. I mean, my photographer, how much are you going to charge me? Is this for a whole year of taking pictures every time I have a listing? It is per job, that kind of conversation. But I will not put them in my payroll. Total lead generation and conversion. This is a number in here, and it's gonna give you, the percentages. Again, remember the 30, 30, 40 rule. We are talking about 30% in cost of sale. We are talking about no more than 30% in expenses to run our business. And we are talking about a profit or at least 40%. Let's go back to some of the expenses. Education and training includes continuing education and seminars. Travel and lodging includes when we go to family reunion. Well, not right now because of COVID, but we usually travel around the United States. Last year, was in Dallas. So if you go to that convention, you're gonna be putting an education cost, and then you're gonna be putting a travel and lodging education cost because you need to pay for a hotel, you need to pay for a plane, you need to pay for your meals. All of that goes to your P&L, guys. If you have a coach, you will put it in here. Amir, that book that you have been listening to, the MREA, that's an expense in your P&L. Okay, that's how granular this goes. Dues include MLS dues, realtor dues, and fees. All of us, guys, I told you yesterday, we need to pay the Liberty Board of Realtors renewal no later than December 1st. This goes to your P&L under dues. Any questions about this? How do you feel about this? Don't you think that is kind of like very clear?
Hi, Patricia. I actually have a question. Can you hear me?
Petula?
Yeah, can you hear me, Patricia?
Yes, ma'am, I can.
Yeah, I have a question about education. I was doing my tax return last year, which was my first time in the real estate, and my CPA was a little bit questioning the real estate education. Like I wanted to, for instance, put there, pay for basically for the whole school. And he was telling me that there is some kind of limit. Are you aware of it, or is it better questions to wait for Dean?
I am totally ignorant about that limit, and I don't want to advise wrongly. I would
Okay.
prefer that we talk to Dean. By the way, guys, please send me your questions if you have them. Like Vendula, if you can send me this in an email, I can put all together.
Mhm.
I don't feel comfortable You know,
Yeah,
I know that you know, these kind of expenses are part of your P&L. I don't know how much of that we can write off. So I prefer that he answers.
Yeah, I will probably include it. I will send you, because even my CPA, he told me it's so specifically real estate that not all education is included, but we spend a lot of money on education, especially in the beginning. So I will
do.
just send you, yeah, let's ask Dean. I think that he will know.
Thank you, Vendula. Let's do that. Send me a quick email with
Okay.
any questions for him, you or anyone else, please.
I will.
Okay, so these are all the accounts, guys. Look at them. Even supplies gets separated, you know, banking charges, office supplies, office operations, other supplies. Even your contributions are included in here for loans, for charitable causes. Below the line, I want to bring this to your attention, are the expenses that may be related to the business, but not directly. Okay, you can see here that it says profit share income. It is contemplating the idea of a rainmaker having a team and actually sharing what he or she gets from profit share. The below the line expenses may not impact immediately your income. And again, are some of the expenses that, yes, they are they have a relation with your business, but they are not included in any of the other categories. Again, a question for my CPA. Okay. The interest income. Well, yes and no. I mean, it is part of my business, but it may not be the direct result of operating it. Below the line expenses, employee profit share, other pre-tax expenses, maybe it's health insurance that you provide for your employees. And here it is the income. Any questions? Guys, come on, you have to have some questions. No, not at all. Okay, let's go back to the presentation.
I have a question.
Yes.
Patricia, do
How are you, Alex? Nice to see you.
Good. How are you? Quick
Good.
question. If you've ever had a chance to review agent P&Ls, what's like the one or two biggest common mistakes agents make when they are that you see in their P&L?
What do you mean? Like the way they categorize their expenses, or
just when you're reviewing them, do you get a chance to review them, or that's not really within that's more of a bookkeeper question?
Well, I can help you, you know, like I can look at your P&L. I guess what I want to know is, are we talking about, should I put this expense here or there? Or are we talking about, we are going to review one, Alex, in this today's session.
Okay, that's perfect then.
Like one of the questions I will ask is, I'm going to look at your P&L and I'm going to see, are you paying yourself a salary?
Got it.
Like that's a big, I would not even call it a mistake. I would say it's something that you should not oversight. You know, like you really should think about. I don't know if you were in the class yesterday, but
yes,
what we should do. You know, like we don't just take the commission check and run with it. There are so many, there are so many things that we should do. Remember, we took the check and 30% of that went to the tax savings. Okay. 70% of that went to us as a salary, but then from that salary, we took some of that and we put it in a tax saving account. And that left us with our, I would say, the money enough to cover our expenses. So, you know, like that is one of the things that is not a mistake, but I think that we should consider the next time that we look at our finances and how we run our business. You know, like why? Because we want to have a specific number. Why? Because we want to get in this rhythm. Like you may receive today a $50,000 check, Alex,
Yes.
and systematic on the way you distribute that money. Again, I mean, it's very easy to run and to book some vacation, and the next thing you know is I may not have any money for my taxes. So, like with a PNL, in a PNL, I can see, for example, the kind of organization this person is running. If I see that you don't have an admin because you don't have it in your expenses section, a payroll for an admin, but I see that you are paying a buyer agent, I will not consider that a mistake, but I will ask you, why a buyer agent when you don't have an admin first, Alex? You understand what I mean? Like, these are the kind of conversations I will have with someone if I review their PNL. Like you may defend your answer and it may be a total valid one, but like experience tell us that we can do a lot as solo agents if we just have a very good admin. So if I PNL and I don't see that admin at all, and I see that you are compensating a listing specialist, I will be like, but why? Does this answer more or less your question?
Yes, thank you so much.
Okay, let's keep going and let's see what else we need to do. We do have a PNL that we can review, and again, it's a discussion. Like it's not like what I say is the right or the wrong. It all can be defendable, and everything may have a reason why. It's just, is that the best? Like that we could, like, is that the best practice? And remember also something that we said yesterday. These numbers, these percentages, this hiring process or mental process of hiring the next person is not coming aleatory. It's not something arbitrary. It is the results of studying, many agents from Keller Williams and other places who have done it at the highest level. At the end of the day, we want that profit of 40% or more. And it looks like it has worked for them. Like maybe we just kind of like take a look at how they have done it and go on that direction. So can you see my screen? It says activity, build a PNL.
Yeah.
Can you see anything else? Can you see my notes? No.
Yeah.
See my notes too?
Mhm.
Let me see. I don't want you to see my notes. Notes that I barely can read with my new glasses. Okay. Let's see. So we did cover that PNL in general, and I have that activity in here. This is pages 59 to 63. Let me see, can I bring that PNL? Do you guys have it? Do you have it printed? Because it's several pages that we should look at. I'm not sure how we can exercise and how we can use this exercise if all of us cannot go through the different pages of Annie's PNL. Pages 59 to 63. Do you have them?
Yeah.
Okay. So basically we are gonna do that, Alex. We are gonna just look at her numbers and we are gonna figure out, certain, I will say, conversation that we can start based on this. She has her income, she has her cost of sale, she has her expenses, she has all those categories, and then she has a business profit number, a total number. So would you like to, or would you mind to please maybe take 5 minutes or so to review and maybe write next to it something that you would like to discuss, something that may not make any sense to you, or just review it so we can get familiar with Annie's numbers, okay?
What page is that? 69 or
59 to 63.
59?
59 to 63.
Okay. Thanks.
Tell me when you guys are ready.
Hi. Patricia,
Ma'am?
I'm not an accountant, so, and I don't do much accounting. But does it look like her, profit is below the, what, the MRI says, which is MREA says, which is 40%?
Yes, it is.
Okay, so
It is. It's 33%. Are you guys ready to discuss?
Sure.
Yes.
Okay. Okay, great. So there are some questions in here, but we also can go through specific numbers. Mary, that's exactly correct. And if you look at it on the total expense number, it is a 45%. So she is already above the 30% required just by looking at that. Okay. There is something on the expenses that, you know, she's 15% over what it should be. It should be 30%. So let's look at these questions that they gave us in here. It says, how does Annie cost of sale compare with the Millionaire Real Estate Guidelines, and how would you advise her? Who wants to answer this question?
Sure. So looking at it, her cost of sale is, I mean, I would say it's good because it's 22% versus the 30% in the MREA guidelines. So that's what I took from it.
You are looking at the cost of sale,
Yeah, I
Yes,
think I
yes.
was.
and we see it's at 22%, right?
Correct, yeah.
So,
So, sorry.
no, just please go ahead.
I was going to say perhaps you could advise her that, look, there's still room for a little bit more of increase in that, but I guess I don't know where, being a rookie and not really understanding where she could increase that. Or I would perhaps say, good, keep it at that, but then look at your expenses because they're way over the guidelines. But I'm sure we'll cover that in the following questions.
So my question to her, Amir, I mean, I do see that she could go up to 30% and she's at 22. But look at the biggest chunk of her, the big number on the cost of sale. It says buyer cost of sale. My question to Annie will be, why you have a buyer agent?
Why does or why doesn't she have a buyer agent?
Why do you have a buyer agent?
Okay, I see.
Because look at this, if you go to the next page under salaries, first of all, she's not paying herself a salary. Do you see what it says salaries owner? And third of all, she's paying an admin. So my question to her is, it looks like an agent who has an admin, and then she has a buyer agent. My coaching moment with her will be, Annie, if your admin is really, really good, you can do this by yourself and you don't need a buyer agent. 30,000 in compensation for the buyer agent. Why instead of that you don't pay yourself a salary, and you and your between you and your admin you run your business that way? You may not be there yet with needing a buyer agent. What do you guys think?
Yeah, that makes sense now that you've said that.
Okay. Let's go to the second question. It says, how does her operating expenses compare to the MREA guidelines? And how would you advise her? The operating expenses, as we say before, is 45%. It should be 30%. I mean, something is there that we need to review because you are over 15%. Again, don't get hung on the percentages, but this is a huge increase. You know, like we are not talking about she went up to 31 or 32%. I mean, this is a lot of extra operating expenses. that I don't think she should be running. Any other comments? Did you guys, how do you see it?
I
I think,
would,
I think
oh.
Annie likes to party a lot. She spends a lot of money on entertainment.
Yes, and that's something that we're gonna talk about. That's something that thank you for spotting that. So her operating expenses, we all agree that should be no more than 30%, okay? The next
Yeah.
question is,
And she pays
what
a
if
lot of
I-
money- she pays a lot of money too on her mileage and interest for the lease, for the automobile she has.
I will have questions on that one too. Guys, what if Annie had accounted for her pay as a salary? Again, if you look at the page where it says salaries and benefits, I don't see anything for her, meaning she's not paying herself a salary. What would have happened if she pays herself a salary? Well, her expenses will have increased, but also it's something that will bring her taxes down. Okay, so again, so far I would say, Annie, you don't need a buyer agent. Make sure that your admin is very talented and pay yourself a salary so far up to these numbers. The salary that
Patricia, before we go on, so is a buyer agent, the cost of goods for buyer agent, is that different than a salary, somebody you're paying?
Yes,
at the
yes, it
salary?
is. Yes, it is. So we said a little bit earlier, there are actually 3 ways to compensate people in your team. An admin will go under salary and it will be an expense in your profit and loss. A buyer agent will be someone that you pay per transaction. It is cost of sale. I will not pay a salary to a buyer agent. Okay, it is a cost related to the transaction. This will go on the cost of sale portion of the profit and loss. And then you may have the next person in your team, if that person is a listing agent, that you can compensate both ways. You can compensate with a salary, therefore that expense is going to show under the expenses category, and then you can give them a bonus, usually 5-10% on each of the listings that close, and that will go under the cost of sale. Does this answer your question?
Yeah, got it. Thank you.
Would you advise her to account for her pay as an expense? My advice will be yes. And that way, I mean, yes, your expenses will go up, but also your taxes will go down. It will increase her expenses and it will lower her taxes. Let's talk about the lead generation. So $15,000 in entertainment. My first question will be on what? I mean, I understand she's paying $1,000 in advertising a month. Maybe I will question that also, but you know, like she should be spending 9% of the total 30. I'm sorry, she should be spending 9% of her gross commission income, which is 270,000. And so far with this number, 15,000, she's expending 13%. What is that? And as Bendula said, you know, like maybe she should need to talk to her accountant because maybe she considers certain things, entertainment expenses that she can put in here and that maybe bring down her taxes, but maybe not. I mean, entertainment is one of those that I will always question, and I will always ask the advice of my, my financial team. 15,000, and if you spend 15,000, maybe could you spend it differently? You know, like in lead generation, but in a different category. What do you guys think?
Yeah, I agree. That was the one area that I saw that was concerning.
So at the end, it says calculate how much Annie is spending on lead generation compared to the gross commission income that she's getting as a result. So the percentage is actually 13%.
So Patricia,
Yes.
hi, thanks for having this course for us. I just was curious, like a lot of us, I think, are in our first year. So our expenses might be high to get our name out, to get to entertainment, to everything, to kick off your business. So we're still, like, if you only maybe leased one apartment and sold one house in your first year, you still only 30% of those profits are towards expenses and 30% to sale.
So I don't understand very well your question, Jen.
Well, I think in your first year you have higher expenses. So I'm just curious, you're still only 30% of what you spend is still only, you should still only be spending 30%.
Well, this is something that I was planning on covering later, and we are gonna cover later. But one of the things one of the things that we need to think of about when we are creating our budget and therefore our P&L is real estate is one of those businesses that without a very big investment or cost upfront can bring you a huge profit. What I'm trying to say is don't focus so much on, oh, I have to have all of these pieces in place and then the business will come. The way I see it is, if you think about it, it doesn't cost that much to get a listing or to get a sale. I will go with my bare minimum expenses to produce that listing or to produce that sale or that rental. And then I will only when I have that money, that profit generated is when I will think about coming with other expenses. Does this make sense? Like a lot of businesses that fall, like that don't go anywhere and they are actually they disappear from the face of the business world is because they spend a lot of money before opening their doors. And that's something, again, I want to bring to you a little bit later. And, think about it. The cost of putting a rental on the MLS is $30. Okay. The cost, if you wish, and if we are running very lean expenses, will be Facebook. It can be those Facebook ads for less than $1. It could be just you calling your database. Okay, that will be my first way to. If I will be an agent in my first year, I will always try to leverage everything that I have around without having to spend more. And then all of a sudden you have that rental or you have that sale, and from there is when you can think, oh, how much I want to invest back in my business. You understand what I mean? Like what I'm trying to say is stop any cost before you even have a sale or before you even have a rental. Anything that you can minimize at the very, very beginning, do it that way. Like don't think wrongly that by having all of this infrastructure in your business, then the business is going to come, because guess what? It may not come and you still have those expenses. Does that make sense? That's kind of like answering a little bit your question.
Yes, absolutely. All I was saying, like, I guess along the Vendula lines that her CPA was questioning her, like our first year expenses would be your schooling, your license, your signing up to the MLS, your Supra. Like there are a lot of expenses right out of the gate. And that's not 30% of my income. I haven't made any income.
I understand that. But again, think about it. What other business can you start? It is what it is. Like any agent who start right now is going to have the first year a minimum of $2,000, period. The board, the MLS, the lockbox, the e-key, the office bill, the like the bare minimum is, I would say, at least $2,000. All business have a cost before they become a business. Like if you open, just think about this, Jen. If you open a retail store, we are going to sell candles. You need rent. You need someone who attend, like the shoppers when they come. All of a sudden, right there, rent and salaries, and you haven't even opened the door. Okay. Can you think about any other business that can start up with like $3,000 as an initial investment? Have you thought about that?
No, of course. That's why we're all on this call. We all became realtors for a reason. We want to you know, try this industry, and it's a great low cost entry.
Correct,
So
correct.
I guess if the CPA were on, he would maybe have advice for us as first year realtors with a lot of expenses. So no,
But
I just
can-
was asking.
Listen, I can tell you his advice because this is very clear. Try to spend the less that you can and try to
Yeah.
leverage everything that you can. For example, your database. You know, like instead of me going and paying for leads, I'm gonna dig into my database. I'm gonna revisit my database, and I'm gonna call everyone on my database. I'm gonna set a smart plan. I'm gonna set some ads, and that's how I'm gonna start my lead generation. And that is kind of like very, very cheap. You understand what I mean? Like what I'm trying to bring to your attention is don't go for this shiny object. You know, like I should sign up with this and I should become a premier agent with this other company and I should get this list from here and it costs me $300 a month. No, your minimum, your board of realtors, your MLS, your e-key, so you can, you know, like your license is active, and then try to leverage what you had. This is something that we are going to be seeing a little bit later. Lead with revenue, not with expenses. Lead with your lead generation. Lead your business with your lead generation rather than with expenses. I could have a real estate company or a real estate team, okay, the Hardaway team. And before I even open my doors and I put my name out there, I may have, you know, like I'm renting 2 offices within the office. I have 2 admins. I have someone who runs my open house signs. You know, like that right there is a high cost for a lead generation that you have not even started. What if I say the Hardaway real estate agent? And again, who's in my database, how I can bring more people into it. Did I talk to all my neighbors? Did I talk to all my extended family? Do I go into church, school, you know, whatever your network is, and told them that I am a realtor? Did I follow up with them? Are you utilizing command? And by the way, this is not about command. To squeeze the most out of your database. I will think about all of that first, keep my expenses the lowest and the minimum, and then once I start generating the money is when I will think about any other expenses. Yes.
Well,
no?
I'm a new agent too. I understand what Jen was saying, because this is a strange year also, but I liked that in bold when they started the program with cost cutting, looking at our expenses even before we personal expenses, all of those expenses even before we start our business, because we may come out with less because we just started the business. As you say, there's an expense to start the business, but when you cut expenses, you can actually minimize that margin between what you lost and what you expected to get or what you didn't get. So the cost cutting personally and in other areas helps you make up a little bit of loss if there is a loss.
Thank you. And we are going to see that right now, Maria Greta. And Jen, this is how I will think if I'm an agent that started right now. I will figure out my total expenses for the year, my total expenses, everything that we spoke about, the $70 a month, the mileage with my car, like any expense that I may, that I already spend the money for or that I'm planning on spending. Again, minimum spending. Let's go to that class next week on how to get leads from under $1 on Facebook. And I will come up with a bulk number. Let's say not 2,000. Let's say $3,000. How many rentals do I need? Since we were talking about rentals, and it looks like the quicker way to start the business. Do I need to cover for the 3,000, even if at the end of the year I just break even? Like this goes to the business clinic that we had last week. Like what do you need to do? How many appointments you have to have between today and the 31st of December so you can make up for the initial cost of being an agent? I mean, the cost is there. We can, I cannot, can anyone think about any business being open with no cost at all, no initial cost? This is one of those that have the minimum, the bare minimum in order to get to profit.
I can't think of any. If you're looking at any franchise, you're looking at hundreds of thousands. We're only talking about thousands, not hundreds, thousands. So there's no industry that you have this low cost to start up. None. Mary Kay, selling cosmetics, something like that, maybe, but not a full-fledged business where you're gonna sell $1 million houses. No, it's not. There's not.
And look at the return of the investment. You just say right there, Karen, $1 million houses. I mean, it may not be $1 million house, the first house that you sell, but that's what it can amount to. Like the idea is, again, low cost at the very beginning, leverage as much as you can by talking to your database, by using your lead generation in a way to lead generate the business, and then at least try to cover for the initial, whatever that number it is. I cannot think about more than $3,000, to be honest. And that is something that you will recuperate most likely with 2 or 3 rentals in the first year. So what is Henry telling us in here? He says, if I got all the money I ever need, I got all the money I ever need if I die by 4 o'clock this afternoon. Well, thank you, Henry. Please don't be like Henry. Please don't be like Henry. We are gonna bring something in here that Mary Greta talked about a few minutes ago. We are gonna talk about our personal expenses also, because at the end of the day, we need to check on both business and personal. I have, I'm not sure what slide it is, or what page it is on your book, but you have this chart in here of personal expenses, things that we have to spend just, with putting aside the fact that we are real estate agents. And I would like to take 2 minutes, and I would like to ask you, if you know that number, to fill it out and to put a dollar amount next to each of the items. We are gonna do a quick review, and we are gonna get at least 2 ahas out of this personal budget worksheet. Do you guys know what I'm talking about? It's on the screen. It's also this page. Like you may have expenses in all those categories, some of those categories. It is very important that we do have a budget also in our personal business, meaning
page
our
65.
household.
It's page 65.
Thank you, Dela. 2 minutes. Childcare, clothing, mortgage, education for your children, groceries, restaurants, medical, utilities, gym memberships, birthdays, anniversaries. If you don't have those numbers, and you would like to do this later, by yourself, by all means, just to give you an idea of all the items that we could be looking at. And let me know when you are done. How are you guys doing? You ready to share? Any ahas? Something that jumps out?
So for me, and even before I'd done this, I know I need to tighten up more so on like the eating out and ordering in. I feel I'm relatively frugal elsewhere, but that seems to be the main thing for me where I know I can save some money. But I've been battling with that for a while now.
Amir, thank you, because that will be my comment. You know, like, I mean, let's be honest, we have the expenses and we have to take care of them, but there are some things that we can control. And one of them will be eating out, restaurants. Another one that I will bring to your attention is actually subscriptions. If you had been plugged, as Mari Greta was saying, in any Bolt courses before, when COVID hit at the beginning and we have to kind of like pivot our expenses, one of the things that they recommended is lose your credit card. Call your credit card company, tell them that you lost it, cancel everything. And as these memberships and subscriptions start calling you, you know, like your credit card decline, can you give us your new card? Review and revise, you know, like, do you need all of those subscriptions? Is this something that you may not, you know, like that you just, sometimes we have it in automatic pay, you know, like, and we are not even aware of it. I myself, I can tell you, I mean, there was this thing on Amazon Prime that I didn't realize that I had $7 every single month. And it was my son, my 12-year-old son, subscribing for something that I never gave him permission for. And somehow my Amazon account, you know, it's kind of like, if you want something, you just get it. The card is on file. And we realized that he didn't even want it. It's something that he liked for 2 months. But that amount, you know, $7 every single month for 2 years. Okay, I could have taken that money and go and eat out, as Amir will say. Okay, so this is nothing but that. Bring to your awareness, you know, like, what is it? Is it eating out? How you can minimize some of these expenses and how you can increase the saving. That's what all this exercise is about. You can print different, you know, like more pages of this. Maybe when we finish the class, maybe this weekend, you take a deep look at how much these expenses amount to. And the question will be, can you spot one that you can reduce? And can you think about a way to increase the savings based on your personal expenses? For me, shoes, just for your information. It's not even clothing in general. You should have a little tiny subcategory called shoes for Patricia. That's another conversation. Let's talk about budget. Are you guys doing okay so far? Okay, so budget, I'm gonna switch again to the spreadsheet. A couple of things to have in consideration when we talk about budget. And again, I'm very aware of it because I've been doing the budgets for all the Keller Williams offices that I have been in for 17 years. The first one is I tend to be conservative when we do these budgets. And what I mean is, for example, imagine that we are gonna get someone in our team, right? In the leadership team for Keller Williams, a new person that we wanna hire. And it's someone that's gonna join us, you know, like the idea is July 2021, right? I will not put that on my budget yet. I will be very conservative on the things that I know for sure are happening. Like growing my team, hopefully having an admin by September. I will not put it in there. Why? Because at least there are 2 times a year when you review your budget, and one of them is in the middle of the year. One revision is in June. So if I'm thinking about bringing someone to my team in November next year, or if I'm thinking, we are thinking about bringing someone to the leadership group in Keller Williams, and it's going to happen after June, then we will have the time to revise that budget and include that expense in there. Talking about, it's not really budget expenses, but think about goals for a moment. I'm also tend to be conservative in when I plan goals, okay, for the office or for myself. Let's be honest, no one wants to get discouraged on December 31st, okay? If I'm a new agent and I've never had a sale and I'm budgeting, let's imagine just to the end of this year, and I'm gonna say, well, my profit goal is $1 million in the pocket. Most likely on December 31st, I'm gonna get very depressed because I'm not sure how you can get that number. Okay, so what I'm trying to say is be conservative, and in the terms of goals, push yourself a little bit up, but enough to make you uncomfortable to achieve it and not depressed because you didn't. Does that make sense? Okay, in expenses, put them up when you have them. And for goals, challenge yourself a little bit. Like maybe you say, I want to have 5 sales, but what about 7 sales? Okay, something that will push you, over and to challenge you, but not something that is, not achievable. And by the way, I don't know if I said this before, I don't know if Aaron mentioned this last week, but there is a goal setting exercise in Command. I have been doing it with agents individually. Please reach out if I'm trying to reach the roster as best as I can. But by all means, if you are ready, just let me know when. We need 30 minutes. We can do this via Zoom, and we can do this in person. And it's actually that, setting your goals that are a reflection of the MREA economic model in your Command platform. What else I can give you about budgets? My ideas about budgets. Think about budgets and expenses rather than an expense. Think about it as an investment. Like, oh my God, and now I have to spend money on lead generation, or I have to spend money on attending this class. Well, think about an investment in, rather than the expense. You are investing in your business. Again, with the caveat of how much should I spend at the beginning, and making sure that I do have the money before I spend it. I think in terms of investment rather than expense. And the other one that I think that we need to keep in mind is practice accountability rather than accounting. Like we have accountants, we have Della here, who's a bookkeeper. Like that's not what the mindset that you have to have. You have to have a mindset of, let me review my P&L, let me review my budget, and let those numbers hold me accountable to the activities that I have to, to the goals and to the activities to achieve them. Okay, so invest in rather than expense, and accountability rather than accounting. 2 things to have in consideration. What other tips I will give you related to business budget? I will say, I say it before, but I'm gonna repeat it. Tap on your database, guys. A lot of you, or the majority of you, have an incredible database that you may not even be aware. Be purposeful about that. Like how many times do we see on Facebook your dear friend bought a house with someone else, or your neighbor, like the second floor neighbor, or the owner of the bakery store in the street, like that doesn't bother you? I mean, when you see those things, where you purposefully telling everyone that you know, everyone that you come across every single day in your daily life, that you are an agent. That database is a goal, it's a mind goal, okay? And I, again, before going to shiny objects and spending money for leads, I will tap into that. Also, if we are thinking about hiring people, let's make sure that you hire the best one that you can hire. Let's make sure that you hire talent in your team. Let's make sure that you hire someone that, rather than do what you ask them to do, goes and does that and then challenge you to go to the next level. Okay, something very important. Sometimes we hire people out of need and out of urgency without taking the time to discover who will be the best person for that particular position. So if your next hire is going to be an admin, let's make sure that you go through the whole process. It's called Leverage Series. It covers career visioning, it covers 30, 90, 30, 60, 90, and success through others. These are training sessions that Keller Williams has available to you. So when you hire that person, you get the most of them. You know, like, it's not just having an admin, it's that because that admin did such an excellent job, you are seeing a return on that investment. Because people also equal return of your investment. You know, like, if you have someone in your payroll and you are paying them a lot, and that business is not going up because having of that person in your team, you may question who you have in your team. Just saying. Any questions so far? And of course, I'm gonna bring to your attention command. You pay in technology $25 every single month, regardless you use it or not. First thing I will do, if you are not very familiar, is I will talk to Jasmine and I will say, hey, how I can make the most of it. I'm paying $25. I wanna see the return of that. Let's see. We talk a little bit about this, and these are habits of how to care for your budget. And we are gonna go to the spreadsheet. The first one is, and we mentioned it before, lead with revenue. Okay, if you go to my outside my door, there is a what is called the economic fundamentals of any Keller Williams office. The first one, it says lead with revenue, not with expenses. Meaning, in other words, have the money first, make the money, and then you go and expend it. Does this cover what we were talking about before, Jen and Marie Greta and Amir? You know, like, let's think about it. I mean, what other business I can start with just belonging to the memberships, getting my license active, paying errors and omissions every single month? I mean, the cost is very, very low and the return can be huge. Don't spend the money until you have it. That's what lead with revenue means, rather than expenses. Lead with your lead generation first, rather than expenses. The second way to care for your business, which is also in my economic fundamentals outside my door, is play the red light, green light. Rather than being worried about how much money do we spend, we should be considering how much return we get on that expense. Okay, the return of the investment. So let me give you a scenario. The bigger expenses in any business is usually the rent, and the salaries, even in your business. Yeah, I know it is for the office, but I'm sure that the majority of mega agents with mega teams can relate to this. Two major expenses: rent and compensation. Okay, if we keep those big expenses the lowest possible, okay, we are using the play with the red light and green light, meaning, God forbid, business goes south, COVID hits, the stream of income is not as steady as it used to be. If those costs, the biggest ones, are already very high, in our mind, we are going to be tempted to scheme and to cut expenses that are actually necessary to drive the business. So in other words, I am a lead agent and I do have a team. And, you know, like my admin is making $200,000 a year. My buyer agent, I have him in a salary. I pay for this state-of-the-art location. You know, like I have screen TVs, you know, like we have a video room. I mean, everything is amazing because I do have that income. Okay, it's coming. This is great. I have profit. This is amazing. Now, something happened, kind of like COVID. You cannot go back, or I mean, you could, but rather than going back to your admin and say, well, I'm gonna cut your salary now in half, you wanna see how I can save money. Like, for example, with my lead generation, these are unfixed expenses that are very easy for you to be tempted to cut them. And they are actually the expense that bring the business. Does that make sense? Okay, so two ideas: low cost on the biggest expenses, and then make sure that if something happens, you don't touch your lead generation expenses because those are the ones that are driving your business. The next advice when we care for our budget is stick to it. And stick to it means that we need to look at it. And we may not want to look at it every single week, but like, take a look along with the P&L every single month. And for sure, reset your budget every year. Okay, now is the time for the budgeting for 2021. And also remember that there is a mass mid-year review around June when we see what were our goals, where are our actuals, and what have changed. Okay, at the end of the day, we get into a rhythm, and this is the rhythm that Aaron was talking about last week. He said, make sure that you have a date with your budget and your P&L so you can review these numbers. Remember when we talked about it yesterday, we were saying there is no point of playing any game if we don't know the score. So if we don't look at our numbers, we will not know if our business is winning or our business is losing. Let me go to the budget for a moment. This is the spreadsheet that all of you guys have already. Where is it? It's right here. Remember that spreadsheet had different tabs. One was the economic model. One was the budget model, which we have not seen before. We talk about the chart of accounts with all the sub accounts that will eventually go to the summary P&L group in categories. So the budget model, your income, your cost of sales, your expenses, all granular, all one by one. And at the end of the day, the profit that you expect to have by the end of the year. I mean, if you look at it, it looks exactly as the P&L because it's a mirror of it. Here is when you do your planning, and the P&L is when you check your actuals. Any questions about the budget model? And remember, everything is here, okay? You just need to go through the little triangles. Will each shows you what the category means. Any questions about the spreadsheet? No? Have you guys attempted to create a budget already? Any has? Give me any has so far from what we talk about. And I talk a lot. I know that. I apologize. Questions, ideas, ahas, concerns, discrepancies.
Hi, Patricia. So I will jump in. It's actually, I love spreadsheets. I know that's weird. And even though if you hire CPA, it's still you who has to put the numbers there.
Absolutely.
So as I'm listening and also chatting with people privately, it seems that like I'm desperately looking for some company like it's called TextBot or something, like, you know, that they can actually create those spreadsheets for us. Do you know what I mean? Like, it's like, first of all, it's tracking your mileage in the car. Then also you can go and let's say that you go to like, I don't know, like Staples and you're buying something for open house. You can just take a picture of the receipt and it automatically creates for you these things. Do you know, is there anybody who can share with us? Because even though I go back to my spreadsheets and I have to give it to my CPA in spreadsheet, that will be so helpful because it's really save you time. Did you hear about that? Like, I know that I kind of did a free trial for my car because I drive now more than ever because of the COVID. So do we not have any experience? Do people think that would be good to do research about it? Or what's your thought about it? It's almost like my aha, because I'm like, as my business is growing a little bit, there are more expenses, I can expense more, but I feel that it will be very helpful.
Yes, so yes and no. And first, I want to thank you for something that I failed to say before. We can have this financial team, we can have all the spreadsheets that you can imagine, all the software, we can have everything. And at the end of the day, as you just say, Vendula, thank you. You and only you are responsible for these numbers, okay? It's not your CPA, it's not your bookkeeper, it is you, it's not your banker or your attorney. Okay, yes, they help us, but at the end of the day, we are the only ones accountable to our goals and accountable to our numbers. In the past, was there was an app to actually track all of this that you are saying right now, Vendula.
Yeah.
Somehow I lost track of it, and somehow it was kind of like not a vendor, but a suggestion that Keller Williams had, and then it disappeared from the planet. I talked to Renee about this before. I believe I talked to Chris in her team about this before. I'm gonna find out what app is that.
Yeah,
That's exactly what you just said. You know, that you have an expense, and is it business, is it personal, you drive your miles, and it's all tracked in there. I don't have the name. If any of you right now know about it, please share it, but I am gonna do my research and get back to you on that.
Yeah,
Maybe
that-
maybe when we have the session in is when I have this information.
That would be wonderful. As I said, I know that the New Jersey realtors give us discount, so I'm trying it right now, but it's a little bit expensive. So if you can help us with that, I think that would be great because that was a great way to start and take it from there, and then we can be more successful.
Yes, absolutely.
This is
Absolutely.
Christina. I just wanted to mention I'm using QuickBooks, and you can track your miles with QuickBooks. If you have your cell phone, you can set it up so it tracks when you're driving. But there's still some work that you have to do to sort the trips, like which is personal, which is business. And then you still have to upload the receipts in the system, in the online version.
Christina, if you don't mind me asking you, how much is that?
I'm doing the self-employed, is $10 per month.
10 months, I mean $10, okay.
$10 per month, yeah.
Okay.
And then I give my my tax, my accountant access to it, and they can just go and get from there what they need for the taxes.
That's
Christina,
great.
have you shared with them the MREA chart of accounts and the P&L?
I was trying to do it myself in the system. So to do the classification, I think the QuickBooks has their own classification, but you can, you can include more granular if you want. You can do whatever you want. You can customize it.
Okay. I'm gonna throw a quick test on you guys right now.
Oh no.
It's coming, Christina. It's coming. We are in trouble.
No. It's just, let's talk about it. If I give you some expenses, would you know, and it's on your book, would you know where to put them in your categories, in your budget and in your P&L? For example, if we talk about $100 for car maintenance, where would you put that? What account would you put that?
Automobile, it will be under automobile repair and expenses, repair and maintenance.
Car maintenance, you mean, right?
Yeah.
Okay. So imagine that you receive the bill for the market center. You receive the bill for the market center and it has $25 a month in technology. Where do you put that expense?
I put it under technology fee.
Technology.
I have a different category. Yeah, I have a category for each of the items in the invoice you send me. So those are separated. Yeah, those are individual items on my chart of accounts.
Yes, Well, the chart of accounts that we are sharing right now has those items in there. Let's talk about $75 for monthly MLS access. Well, we don't have that monthly. It's actually once a year. But what would you put that?
Again, I have that as a separate item, MLS fee.
Dela, but I want you to use the chart of
The
accounts.
chart of accounts, okay.
Yes. Where would you put it if you will have the chart of accounts with you?
I guess it would be under listing management, under services. Yes,
will-
no?
MLS access and education. Yes. What about $100 for lead generation a month?
So that will be under also the listing management services.
That will be for lead generation, actually.
Hold on. I'm sorry, I'm not, yeah, sorry, I had it, I didn't have it on my screen.
Fine. So that will be under the lead generation, and actually the lead generation goes deeper than that, and it says advertising. So it will be the subcategory advertising within the category of lead generation. Okay, any questions about this? Let's talk about tracking our numbers. If you don't have any questions. Oops. We did that. Okay. Who is familiar with the agent's trend report? And do you know how to get it?
I'm sorry, the what?
Reports. So we are talking about tracking our numbers, and we are using two tools. One is the PNL that we are revisiting and reviewing at least once a month. And the other one is this tool that Keller Williams has for all of you. If you go to KW and you go to the instructions under, and you go to reports, you go to the associate reports, you will find a report called multi-year trend. It looks like this. Oops, sorry. It looks like this. Have you seen it before? I know some of you have.
I've seen it, you send it, but I don't know how to use it.
Okay, and that is okay, and that's what we are talking about it. This report, guys, is available to all of you. Go to KW, go to reports, go to associate reports, and it's called the agent trend report. Just for your information, the office has one exactly the same as yours. And it actually, what it does is track different numbers and different categories for you within a year. If you had been in Keller Williams, if I will be an agent, okay, and I have been with Keller Williams since 2002, my trend reports will show all of those numbers for year 2002, 2003, 2004, and it shows like that. Here is the year, and here are the different months. Then we have two numbers on the side. It's called the month over month and the year over year. I don't want to spend a lot of time on this. I want to bring to your attention that is available to you. I want to bring to your attention that, as we said yesterday, numbers tell us a story. And for example, when we review the multi-year trend for the office, and we see the numbers, and we see the, like what happened year over year, we see an increase, or month over month, we see a decrease. How come in the month of October last year, the number of units was higher than this October? That's something that you see on the side of the report, correct? So I just want you to be aware of it. I just wanted to tell you the categories that it covers, which are the 8 categories related to production, which are the units, the sales volume, the units written, the written volume, the listing sold, the listing sold volume, and then other categories like your appointments, if you are entering them in Kelly, your 1099 income up to, you know, the year, when whatever the month we are looking at. So be familiar, know that it's a tool where you can extract some information very powerful. If my number of, if my GCI this month is greater, you know, like that last year, or is bigger than what it was last month, why is that? What happened 90 days ago when I was working that result in me closing all that in gross commission income? Okay, again, this is a way to be aware of your numbers and to extract information from it. These numbers tell us a story of our business, and these numbers help us tracking what we have done. You don't need to do anything for this report to be generated, because I actually do it. It's not that I enter your information manually, but every time you have a closing, it shows on your report. Every time you have a commission created in command, what it used to be the green sheet, it tracks your written unit and your written volume for you. Every time you get a check, it tracks your gross commission income. The only thing that you have any obligation to track these numbers is if you want to put your appointments via Kelly, and the appointments will show up in the first line of your report. Just to bring something else to your attention, this is the report that we use to create what is called the language of real estate. And it's basically that we compare these categories, the closed units, the closed volume, written units, written volume, listing sold volume, and we compare those numbers with the MLS. The spreadsheet that we share every single month after the team meeting has a portion at the underneath the MLS numbers and the market center numbers where you can plug your numbers. So basically the spreadsheet works like this. In October, we outpaced the MLS by 20% on closed units. Okay, at the bottom of it, if you enter your units, it will calculate automatically where you stand in comparison with Keller Williams and in comparison with MLS. A lot of agents in Keller Williams use that for their marketing materials. So basically they take what the office gives them. And again, I give you these guys every single month, and it is in one of the document folders in our library, every single spreadsheet up to the last month that we closed. So the one that you have right now is for September, because October obviously has no is not finished yet. You can enter your numbers and say, hey, guess what? Sellers, buyers, in the month of September, I outpaced the MLS by X amount of money in my closed units. And guess what? In the month of September, I outpaced the MLS in the number of contracts written. You can even be outpacing the office overall. So just be aware of that tool. It's called the language of real estate, or lore exercise that we put in the in our document library every single month. Guys, don't tell me that you haven't seen this tool before. You
Hey,
have, right?
Patricia, where do we access it again? Can you show us?
Yes, I'm not gonna show you, but you talk about the report or the spreadsheet, or I'm gonna show you both. So for the report, the trends report, you go to kw.com, and then you go to reports underneath your profile picture, and then you go to associates report, and then you find the multi-year trend. And again, this is a scope of every single month since the first day that you join Keller Williams. Any closing you have, any rental you close, any your 1099, your appointment, if you put them in Kelly, your listing sold volume, all the categories are there. With that information, you can enter your own numbers into that spreadsheet called the lore report, the language of real estate. And that spreadsheet is given, you know, I give you this spreadsheet every single month, and it is saved under the library in the intranet. And in there you will see, the comparison of the office and the MLS, and then you can plug your numbers. Good? List at least one action that you will take as a result of what you have learned in this chapter. Come on, fast. Unmute yourself.
Staying on top of my numbers, because it's not something I've done in my previous business. So absolutely that. And I think having all of these templates and resources is invaluable and should really help me and lead to no excuses for not doing it. So that's mine for sure.
Thank you for that. Someone else, an action that we are going to take based on what we have learned yesterday and today.
Set an appointment with you to go over my numbers to understand that report on how it reflects me.
The multi-year trend? Just send me an email, Karen. Absolutely. Anyone else?
I will probably follow up with you to find like a good tracking system with the mileage, and if something can help me exactly categorize to make it easy for my CPA when the taxes season comes. So I hope that we will find either the QuickBook or the, I don't know, TaxBot or whatever. It's the best app out there to help me.
Yes, but my beg for you is please take a look at the spreadsheet and all of those subcategories in there, and make sure that your CPA has a copy of it, Vendula.
Yeah, I do it. I will help him. Yeah,
Okay.
since in real estate, specialize in real estate, and I will definitely try to help.
Anyone else? And here I am again going over the timing. I'm gonna summarize what I have to tell you guys. I promise I'm gonna be out of your hair by probably 12:15. Any other has? Okay.
Profit first.
Yes.
Profit, right?
Profit. Profit is the name of the game.
That's it.
Let's talk about this real quick. How is your health? And it is on your materials, and it basically says, like, yes, profit is a big important part of our business, but we need to see our lives as a whole. Okay, we can be making all the money in the world, but if we are not good, if our health is not good, if we have a spiritual trouble, if our personal life is messed up, like nothing will make sense. This is, in my opinion, another course. It's called actually Quantum Leap. One of the babies that Gary Keller created back in the day. Until we get the next Quantum Leap taught by Gary Keller, read the One Thing book. It puts all in perspective. Like it's not, let's make all this money if we are suffering in other areas of our life. Do you guys agree? I mean, more than anything, this is a reflection moment, like this is you in the middle of it, and how is everything else, like in personal, in key relationships. We are living the results or the, the results of COVID. And, I don't know about you, but sometimes I get very, very stressed, and a lot of my other portions of my life get touched by that. I mean, the fact that I cannot visit my family, the fact that I have lost some contacts with friends, like just something to keep in mind and reflect. I leave this for all of you to do individually. Let's talk about the future for a moment. And when I'm talking about future, I'm not talking about just disaster, as it says in our books, disaster happening to us, or getting sick. I'm talking about what if your idea is what we mentioned yesterday. You just want to retire. Let's think about the future two ways. What is the worst that can happen, and what is the best that can happen? The worst that can happen is, hey, you know what? All of a sudden, I cannot do real estate. What are you gonna do? How your business is gonna survive? And this is something that I would like to discuss more than teach you about anything, because there is not much to teach about. Are you ready if tomorrow you cannot do real estate to support your family? How will your family, how you will sustain that family with a reduced income or no income at all? Is there someone, maybe it's your spouse, maybe it's your son, maybe someone in your team, someone can take care of your business if you are discapacitated and you cannot do it yourself. Like these are things that, it's not negative thinking, but it can happen. So guys, have you ever thought about it? I know that all of you are young and beautiful, but it's never late. I mean, it's never early to think about our future. What do you guys think that we can do to become more, to set up for a better future financially? Ask questions. What am I talking about? I'm talking about you cannot work. And then what happened? Do you have an admin who can take care of it and say, don't worry, get better for 6 months. Don't think about real estate. I'm gonna make sure that the business keeps afloat and that we are still profitable. Is there anyone that you need to train? Okay. So when we think about our future, 4 things we should think about. Do we have any savings plans? And I said yesterday, I don't have a lot of knowledge. Like I don't know a lot about IRAs, 401s, Roth investments. Obviously, this is something for a financial advisor to help you with, but something to keep in mind. Is there something that you can do right now in that sense that can help you to set up for a bright future? The second one will be to actually grow your profit share. And this is not, like I'm not here to talk about profit share. I'm here to explain to you how it works really fast. Basically, profit share is a gift that Keller Williams gives you when you attract other people from other companies to our family. Profit share works based on the profits of the owner. I'm gonna repeat that. Profit share is based on the profit of the owner. Okay, so I met Amir and I really like him and I think he will be an asset for our Keller Williams family. And I'm like, hey Amir, would you like to know more about Keller Williams? And Amir says yes. And when Amir comes, a question is gonna be asked from him. Amir, who brought you here? And you're gonna say, it was you. I know it's not me, but for the example, right? When you, Amir, close your properties and produce within a month, remember guys, we are a month-to-month operation company. You are contributing to the profit of the company with that those closings, correct, Amir? So what Keller Williams does at the end of the month when we close the books, I close the books, I send them a profit number, and I tell Keller Williams, this is the profit, total profit for the month, and this is our total profit share for our agents. So Keller Williams gonna look at that number and say, oh, who contributed to that profit? Oh, it was Amir, and it was so and so and so and so. And then what Keller Williams does is think, who brought Amir to this company? And because I was the one who brought you, that profit share is gonna be distributed and I'm gonna receive a little bit of it. It's not coming from you, Amir. It's not coming from any agent in the office. It is the owner of any Keller Williams office deciding that half of the profit that they should put in their pocket is going back to their agents. This is another complete class. For more information, I will go to Grow Your Profit Share 3 training, but just a couple of ideas to think about this. You can bring agents to the Keller Williams family anywhere where there is a Keller Williams office. So I'm from Spain, and I do have friends in Spain. And the moment one of them tell me that they are in the real estate business, I'm gonna tell them, hey, talk to a Keller Williams office, and see what they have to tell you. You may like it. And if that person in Spain says that I'm the one who somehow influenced them to have that conversation, I will be growing what is called my growth share, because internationally it's not called profit share, it's called growth share. Profit share is something that you can give to, God forbid, something happened to you, you can give to whoever is in your will. You have a beneficiary. As long as your profit downline is active, you can have this passed into your children. Profit share is something that after a couple of years in the company, you are vested in. As I said before, I may be the grandmother of Keller Williams. I've been already with Keller Williams for almost 19 years. If I will leave Keller Williams right now, I will still receive profit share because I am what is called vested. So any questions you may have about profit share, I would love to help you. Guys, this is another way to think about building our future. Profit share is nothing but passive income. And passive income is the one that you receive by doing nothing, zero. You don't have to do anything other than have friends and tell them your experience with Keller Williams. Okay? Any questions so far? This is not a recruiting moment or anything like that. This is just bringing to your attention that profit share can help you build that passive income that we need to secure our future. The next way to secure our future is actually with the investments that we should be doing. We talked about it yesterday. We, at the end of the day, we are real estate agents. We are advising our clients to go ahead and invest and receive rental income and passive income that can set them up for a successful future. So maybe this is something that we should do ourselves. You know, like, do we own our own properties? And if do we own our own home? And if we don't own our own home yet, what needs to be done? You know, let's make sure that all of us have our own home, and then we have investment properties, and think about that rental income as a way to secure our future. Any questions so far? I'm not gonna ask you, you know, like if you own your house or not, if you have investment properties, but it is in my agenda. It is in my agenda to, I own my house, but I do want to have 2 investment properties. I told you already, one for each of my sons. So when something happens to me, my sons will be set up financially with that portion, besides their personal efforts. The last way to think about our future is actually expanding our team. You know, the majority of you are solo agents right now, and that is great. And that is also great, not wanting to be a team. You know, like, just, I am an agent, my profit goal is X, I can do it by myself, and I'm happy about it. No problem at all. I'm not challenging you to do that. However, if you do that, there is what is called the organizational model. We talked a little bit yesterday when we were reviewing the MREA book, and I know that Aaron went into deep details last week. It basically shows you and puts you in the mindset of bringing people to your team to the extent that you grow it to what is called the 7th level. In the 7th level, the only thing that you are is the owner of that team. You can be running your team from the Bahamas and still your team being extremely successful and getting a lot of profit from it, because you have been building it gradually with an admin, with an inbound a sales agent, with a showing assistant, with a buyer agent, with a listing agent, with a, you know, you have all the organigram, the diagram in your materials, and it is not the class for it. But think about also this idea. What if I run my team to the extent when I'm not even needed? I'm retired with my other, you know, my other half. I live in Paris right now, or I live in Spain. And in the meantime, my real estate business in the United States is kicking back. So this is all I have for today. Think about those 4 options. Any questions?
Hi, Patricia.
Yes, sir.
Well, we were discussing this yesterday. Can anybody recommend an insurance agent for disability insurance?
I'm not sure if Giancarlo's put on the chat certain resources related to yesterday. Alex, I know one insurance agent. His name is Joseph Adamo from State Farm. He is extremely, extremely good.
Okay.
The information should be there. Did you guys see it? Has Giancarlo's put it in there yet? Let me talk to him for a moment. Give him a call. And you know
Okay.
what? Maybe Alex, if he is not the person, I'm sure that he will have someone to recommend to you. He is really, really not only knowledgeable, but very honest. Like sometimes I get, like especially my insurance related to my car, like I hear things that make me, like horrify me. This guy is
Right.
very, very honest.
Okay,
Let's take
great.
it from there. Let me see if
I'll
Giancarlo-
email you.
Okay, but let me see if Giancarlo's put those resources in there in the meantime. Hold on. Can you throw that email in there? The one with all the resources that I gave you? Oh, okay. Okay. He told me he put it in there. So you're gonna see his name, you're gonna see his cell phone number. We also put on that resources at the beginning of the chat. The Wealth Building Wednesdays, talking about building your future now, passive income, rental properties, investments. Hold on. I also put in there, if you are thinking about investments, 3 books that you should be familiar with: The Millionaire Real Estate Investor, a book called Flip, when you are planning about on buying properties and then flip them. A book called also Hold, which is written by Keller Williams, and it shows you what needs to be done, in case you don't want to flip a property and you just want to keep it for a while. I also put in there a couple of links to ProfitShare Facebook group, a group called Building Wealth with Mark King. He goes early in the morning through a lot of strategy about creating passive income. Again, not only from ProfitShare, but from investments. I believe that all the things that we were talking about yesterday had been covered with those resources. And I'm gonna urge you, please email me questions for Dean. Bendula, I'm gonna do my homework for when he comes, and anything else that you wanna share, guys. Every single one of you, please give me one item, one that you wanna do, an action. I'm gonna review my budget. I'm gonna look at the spreadsheet. I'm gonna think about friends that I have in other companies, or friends that will be, that maybe they are not even licensed yet, but would like to become a real estate agent, and let's see if they will come to Keller Williams. What are you gonna do?
I'm gonna cut my gym membership because I haven't gone, and it's
Okay.
almost a year now.
Hear you.
I just dread the rules that I'll have to pay for 2-3 months before I'm allowed to cut. So I'm gonna have to go down there and ask myself. I don't understand their rules of. I'm dreading cutting with them for the cost that it's gonna cost me, but it's costing me anyway. So
I was
I
gonna
might as
say,
well.
if you don't stop it, it's gonna keep costing you. Anyone else? Come on, guys.
Okay, Patricia, I'm gonna look more at my profit and loss. I gotta keep my numbers in check and make sure that I follow the form and do the form. It's one thing to have it, it's another thing to do it and put the information in. So that's what I have to do and get better at.
Absolutely. And guys, I already say, like if you need help with that, it doesn't mean that all of a sudden all of us know everything about P&L, but like, your numbers. It's a matter of entering them, and it's a matter of have a real accountability conversation with you and those numbers, like what are these numbers telling you? Anyone else? Okay,
I'm also gonna say health-wise, I'm gonna keep my gym membership and just start going to the gym. Because that's important. I need to go to the gym. It's one thing to have the membership, but I got to get up and go there. So that's another thing that's going to be on the bucket list.
Brenda, please promise all of us this, okay? Excuse me. If we follow up with you in 2 months and we see that you have not gone, you're gonna do the Marie Greta move and you're gonna cancel it,
Yes.
okay?
Yes.
Let's be realistic with ourselves.
Exactly. Exactly.
Okay. Anything else, guys? Well, thank you very much for, for coming. Let's be honest, this is not like the most beautiful class out of all. It's about numbers, it's about spreadsheets, and it's kind of like raw materials right there, but we need to be aware of them, we need to be accountable to them, and we need to act on them, as Amir said. So this is all I have. I'm gonna follow up with Dean. I'm waiting a little bit since all of this happened so recently for him. And then I'm gonna secure a date and I'm gonna make sure that every single one of you know about it. And I'm gonna come with whatever research I found related to that app or something that can help us easily to track all of this. Thank you so much for coming, guys. Have a wonderful day.
Thank you, Patricia.
Thank you.
Thank you.
Thank you. Have a
Bye.
great day, everyone.
So thank you very
You
much.
too, Brenda. Bye.
Thank you.